Hello and welcome. I'm Martin Hearn, Event Director at Future Build, and it's my absolute pleasure to welcome you here to today's webinar. Now, this webinar is in partnership with Barber ABI, and I'm very, very pleased to welcome both our hosts. But firstly, let's talk about why we're here. If you look at the UK built environment right now, it feels like a complete contradiction. On the one hand, we've got falling housing stats, rising costs, and a shrinking workforce. And on the other hand, we're seeing 700 billion investment into infrastructure, explosive growth in entirely new asset classes like data centers. So the real question for today and what we'll be addressing is what's happening? It's where the market, where is the market actually going and who benefits? So today's session is about cutting through the complexity using real data, where the pressure points are, where the growth is actually happening, and how we position for it. So to unpack that, I'm joined by Ed Griffiths, Head of Business and Client Analytics at Barber ABI, and Hannah Robbins, Sectors and Markets Manager at Barber ABI, who will spend their time deep inside data every single day. As part of Barber ABI, Future Build's data partner, and in the UK's leading construction intelligence provider, they bring expert insight into the trends shaping the industry. So before we start, a little bit of housekeeping. So firstly, we want to keep this as interactive as possible, and we'll be running some polls. So after Ed and Hannah's presentation, I'm going to put some polls live, and these will appear on your screen. Really want you to take part in those because, data and intelligence is what today's all about, and we want to get some of that from you. So please answer quickly, and we'll review the results afterwards. Secondly, really want you to ask questions. So in the top right of your screen, there is a questions tab. Please keep them coming all the way throughout the presentations. And then right at the end, we'll do a bit of a Q&A. Unfortunately, they won't have time to answer them all, but I can assure you we will be able to get back to you after the presentation. And then thirdly, this webinar will be available to watch back on demand, and everyone will receive an email soon afterwards with more information on how to access that. So it's my absolute pleasure to hand over to you, Ed, to start the presentation.
Brilliant, thanks very much. I'm just being given the ability to share my screen. There we go. I'm pretty confident everyone in the audience will be able to see that. Thanks very much, Martin. Yeah, good morning, everybody. As kind of introed, it's Ed and Hannah here from Barber ABI. For those of you that don't know who Barber ABI are, I just thought I'd give you a very quick introduction to us. So we're the UK market leader in built environment intelligence. We have the privilege to work with over 3,000 clients across the UK, and that's been both the built environment as well as many other kind of shoulder industries like retail, insurance and finance. Our mission is to help people grow within the built environment, and we do that by predominantly serving them with intelligence about projects happening across the UK, construction projects happening across the UK. What sets us apart is that we're conducting hundreds of thousands of hours every year of desk-based research to furnish those projects with all of the nuggets of insight that you guys come to expect from us. We're also really proud to be partnered with the ONS and also the government as well, working across a wide range of key projects. In terms of who me and Hannah are, my ego is big enough. I'm not going to pad my own CV there, but you're welcome to read that or catch up on it later. But I'd just like to talk about Hannah for a moment. So Hannah is our sector and markets manager. She's basically responsible for work across both all of the renewable sector, but also infrastructure as a whole as well. And she's regularly speaking to the government and industry contacts. So it's a valuable asset to the team and obviously great to be on the session today. In terms of what we're going to be presenting about today, I'm going to basically go through some of the headwinds that we're facing into in the industry at the moment before Hannah comes on to talk about some of the tailwinds, so probably some of the opportunities, and then we'll round off and we'll reconvene with Martin in about 20 to 30 minutes time. So starting off with, I suppose, what I see as the biggest headwind, if you like, is the labour challenge that we're currently facing at the moment in UK construction. So the left-hand chart is showing you the proportion of people employed in UK construction by different age bands. So for example, 9.4% of UK construction is aged 16 to 24. And the right-hand chart is showing you the number of construction workers, which is the black line, and the left-hand axis. And the red line is the share of employment that UK construction holds of all of employment. And the two key things to call out there are that UK construction is exposed in terms of having an aging demographic. So far more people in construction are sort of older in terms of age. And then also we're seeing a declining share that UK construction holds of overall employment. So that tells us that construction is getting less popular as an employment source as well. A few little additional stats to call out there. So some things that we've seen in our own research. So 50% of apprentices typically drop out within 3 years. And in an industry where you see it heavily weighted towards older workers, that's obviously a big concern because we're not getting as much new blood. 7% of 16 to 18-year-olds are considering a career in construction, which is great, but it's only 7%. We need that figure to be much higher in order to start instilling the change that we would need. A third of those 16 to 18-year-olds felt that their parents would actually actively discourage them from entering construction. And then finally, 77% of 18 to 24-year-olds are not contemplating working in construction. So all of those kind of little insights or KPIs there tell you that at the moment, the main challenge isn't replacing the retiring workers. It's just very simply convincing the next generation that it's a career path that they should choose. So labour's a big challenge. Second thing I want to talk to you about is inflation. So this chart showing ONS data on monthly material prices indexed against 2015. So that means that everything is being referenced against prices from about, call it 16 years ago, 11 years ago. And the key takeaway from here is that we saw a steady period of significant inflation during and post-COVID. That did slow down, although not shown on this data simply because the ONS doesn't have as up-to-date information. But all of the data sets that we have looked at have told us that actually inflation in 2026 has begun to ramp up quite considerably again. And that's after 2 relatively stable years. The main drivers for that are labour that I was just talking about, energy costs, the global trade situation, shipping costs, but also the geopolitical tension. I think we're in the 6th year of there being a significant event in each year that has had a seismic impact on UK construction and the economy as a whole. So it's really telling and putting a great amount of pressure on the industry as a whole. From a financing perspective, so here we're looking at the Bank of England base rate. It's worth noting that the axis here is slightly misleading and that we're only charting when there were changes in the base rate. So for example, if you look in the middle of the chart, I'll just give you a quick indicator. If you look in the middle of the chart here, you can see that actually a considerable amount of time passes here, but the chart axis doesn't necessarily give that same indication. And basically what this chart is showing us is that following the period of relatively low interest rates that we saw between sort of 2008 following the recession that we saw back then up to about 2022, we were really spoilt with low interest rates. And actually those interest rates have started to spike, and that's really been a talking point, if you like, for UK construction and financing costs. We have seen that slightly come back, so dropping from 5.25, but it's peaked to 3.75 currently. But really, still, people are contextualizing that 3.75 against the period where it was very, very low between 2008 and 2022. High borrowing costs obviously have a significant impact on marginal developments and their viability, and that's particularly relevant to house building, which is where we're seeing significant amounts of pressure at the moment. From construction perspective more generally, when we see high interest rates like this, we typically see less construction projects. We see projects in pre-planning and we see projects sitting in pre-planning and planning stages for much longer, so not going onto site. We obviously see the viability pressures that I referenced. We also see substantially weakened demand as well, and all of those things coalesce into quite an awkward picture for UK construction and for the people operating within it as well. We're obviously operating in a much higher cost of capital for development market, and that inevitably does trickle down into housing and commercial properties more substantially. From a residential perspective, here we're looking at starts and completions of residential properties or UK dwellings, and the source again is the ONS. So we're looking back to 2010, and what we saw since the global financial crisis, we did see housing starts recover quite steadily, reaching a peak of around 50,000 units per quarter by 2018 to 2019. The sharp rise in interest rates from 2022 significantly impacted development viability and obviously buyer demand as well. New housing starts fell dramatically during 2023 and remain well below pre-pandemic levels now. Completions have obviously been more resilient as developers have continued to finish schemes that were already in construction. But the divergence between starts and completion suggests a weaker pipeline for future housing, which is obviously it's food for thought, but also cause for concern as well. Food for thought in the sense that there's obviously going to be increasing pressure, but it highlights that the situation could turn around quite quickly if we're able to see an influence in things like interest rates or affordability or confidence in the near future. Completions tell us about decisions made several years ago. Starts tell us about confidence today. And while completions have held up reasonably well, but have slowly seen a tailing off, it's the weaker level of starts that indicates developers remain cautious and suggests that housing output is obviously going to remain in the short to medium term. It's not all doom and gloom in residential. I would call out that RMI, in particular in social housing, has been slightly more buoyant. So there are large elements in social housing that are mandatory RMI elements. Obviously, there's a lot of post-Grenfell activity that is still occurring that has injected significant amounts of work into the industry. There's also things like Awaab's law and mandatory exercises that need to be conducted around mold and damp as well, that again are just putting work into residential, but not in specifically new build and completions capacity, but instead on RMI. Even when things are approved, delivery still remains challenging. So there's lots of headwinds that are preventing us getting projects into the pipeline. Projects that progress through the pipeline and are almost ready to start still have substantially more hoops to jump through than they might have done 5 or 10 years ago. So I'd call out the Building Safety Act, which, while is commendable and absolutely the right thing that we should be doing as a nation, does put increased requirements onto both the developer and contractor, but also onto the building safety conductor itself as well, as obviously applications need to be processed. So that's resulting in delays both at an approval stage, but also at a completion stage as well. So protracting the projects throughout their life cycle. Biodiversity net gain is another area where there are increasing kind of regulatory bloat. So we've got more surveys, more decisions, and more mitigation requirements required because of those. Nutrient neutrality is another area. It's really impacting on residential, and it's only relevant in some areas, and some catchments. But the areas that it is impacting, it's causing substantial delays. Local authorities are still a bottleneck for many applications. So 79% of local planning authorities are still reporting recruitment difficulties. If they're unable to recruit the officers, there are less officers to do the approvals, and so subsequently we are seeing delays in applications still compared to the speed that things moved through that process 5 to 10 years ago. And also we have ongoing concerns around grid connection, specifically on power, but it's similar on water as well. The current queue is around 4 times larger than the required base for 2030. So that's again just highlighting that even when a project is approved, it doesn't mean that the spade will be able to break ground anytime soon. I often reference it. If any of you have seen me present before, I reference Lower Thames Crossing as a really good example of the kind of the regulatory bloat and sort of hoops that we are required to jump through in the UK. I think before any construction had occurred, we were about £1.3 billion deep in just progressing that planning application through from no application to the application's been approved. So £1.3 billion before construction's even begun. But I would compare that to the largest underground road tunnel in the world, which is in Lardal in Norway. That was completed some time ago, but for today's money, it was completed for less than 300 million. So it just highlights that in the UK, we spend a lot of time planning and we spend a lot of resources on planning, particularly on large infrastructure projects, where other nations and other industries are perhaps able to move in a more agile way. obviously there's quite a bit of doom and gloom in what I've just been going through there. So I'm going to hand over to Hannah now, and she's going to talk a little bit about where we do see some tailwinds and some opportunities within the industry.
Yes, thank you, and good afternoon, everyone. Like Ed said, I get the sort of a bit more positive task of talking about the tailwinds behind the industry, about the sort of wider investment in infrastructure, and then we'll sort of specifically look at data centers within that sector as well. So to start with, let's look at the wider sector, and like I said, specifically infrastructure. We're seeing sort of record levels of investment, specifically about 718 billion in public and private capital commitment towards infrastructure projects, and this is specifically seen over around 734 projects. If we looked at sort of specific sectors within infrastructure, we can highlight renewable energy. So there's a massive, you just have to open the news at the moment to see there's a massive push towards being self-sufficient as a country, not having to import as much of our energy as we can. And we've seen the results in the investment coming through from the government. We can just talk about the recent contract for difference allocation. It was a record this year in AR7. Within sort of the same sort of infrastructure similarity, we can look at water as well. So AMP8 or AMP8 is specifically around sort of our water infrastructure. So that encompasses waste management, pollution initiatives, so trying to decrease the pollution we're seeing, and supply to sort of private and public people. And the specific investment in this is about 104 billion between 2025 to 2030. So even though Ed sort of highlighted all of the challenges happening at the moment, we are seeing investment in infrastructure projects, in investment in the country moving forward. So with this investment in mind, are we seeing that reflected in the planning applications being submitted? So if we move on to the next slide. There we go. So the answer is yes, but I'll explain that a little bit more because we've got two graphs here. If we look only at the one on the left, we can see that the actual application volumes are quite steady across the years, and they're quite steady within each individual sector. So you can see transport, the top there, followed by power and utilities, which is where that renewable energy and water fits. However, if we look across to the right, we can actually see that even though the applications have remained steady and volumes have remained pretty much the same, the value of those projects has increased as the years have gone on, especially in that power and utilities sector. So even though, again, we'll look at transport, you can see the sort of set amount of projects, you can see that the actual spend within that sector is quite small. Whereas if you compare it to utilities, which again have remained quite steady, you can see an absolutely massive increase in 2025 in the scale of the projects that are being proposed. So even though the projects have stayed the same, the projects have got bigger. Now, let's look specifically at data centers. So if we move on to the next slide. Has all of the investment that we see on a wider scale, how is that investment reflected in data centers, and do they have sort of the same drive behind them, the same desire for the sector to grow? And the answer is yes. So if you were to look at a PESTEL analysis, and if you're not familiar with that, it refers to political, economic, social, technology, environmental, and legal. All of these separate factors are sort of standalone, but they also sort of feed in and out of each other. So for example, if you were to look at an economic driver is the demand in the UK at the moment for tech growth, for AI, for supercomputing. This then sort of feeds into the reliance that you've seen in the public sector on supercomputing. So you think about the NHS estate, you think about your banking, and that's sort of a social factor. All of these then drive a political factor and legal factors if these projects are now classed as nationally significant infrastructure projects because of those sectors being reliant, because of our drive towards technology being a primary industry in the UK. The planning applications being streamlined. We're seeing AI growth zones. We're seeing priority access to grid connections. So all of this accumulates in yes, there are drivers behind data centers at the moment. It is a sector that's being pushed within the UK. So again, with all of that in mind, like we did with the whole of the UK, are those drivers being reflected in the volume of planning applications we're seeing? So move on to the next slide. Simple answer is yes. You can see quite easily that there was a massive spike in 2025 from 2016 with 12 applications. We've gone all the way up to 63 applications. And if the current trends within the market and current signifiers continue as they are, our projections at the moment for 2026 would see about 52 applications being submitted, so sort of midpoint between 24 and 25. So with all of these drivers behind it, with all of these new applications being submitted, how is that affecting sort of the construction industry and people who work within it? So again, if we move on to the next slide, we can see that while there are a handful of strong companies that have credentials within sort of specialist credentials within data centers, the opportunities aren't limited to those specialist companies. You can see that the opportunities within data centers are reflected not just in construction, but within design, within engineering, within the whole supply chain. And with the applications that are being submitted, you can see that that supply chain and those opportunities are going to continue for quite a number of years. So we've seen the applications, we've seen who's involved, we've seen all the drivers behind it. If we move on to the next slide, what we've also tried to look at is, yes, they're submitting the applications, but at what point does the proposed data center become a data center that's operational and working within the country? So just to talk you through this graph here, what we've done is down the bottom, you can see the amount of applications that have been submitted. However, on the side, we've calculated we've looked at our data and we've seen how many have actually started on site, so actual sort of construction spades in the ground. And that's visualized quite nicely there by the size of the bubbles, we'll call them. So you can see in the middle there, 2024, there were about 21 applications, but about only 5 of them have started on site. If we look at the 2020 to 2022 and the size of those and where they sit in the graph, that's what we'd expect the construction industry and the pacing of these types of projects. If we look at from 2023 and even arguably 2026, they're not progressing at the speed that we'd expect. They're a bit too low on the graph. There are a multitude of reasons for this, and Ed touched upon quite a few of them in his slides, but obviously the main one would be the capacity constraints. So we talk about the zombification of the grid and the pipeline. You've also got the challenges of, even though there are a multitude of opportunities within the sector, it is still quite specialist and you do need specialist equipment. So if you see delays in that, it can delay projects. You've also then got just the wider infrastructure requirements. So again, you can't really talk about data centers without hearing about water and energy. So all of those need to be in place before we can actually build and get these projects up and running. However, with that said, what we can see with the Barber data here is that there are still opportunities within this sector. So rather than just looking at all of the applications that have been submitted and going, oh, they're done and gone, people are involved, they're out of view. What we can see here is that these projects are still very much active. They're still very much on the radar for companies to get involved. And if we move on to the next slide as well, we can see that the breadth of those projects isn't just limited to London or limited to our major cities, but it's spread across nationally, across the whole of the UK. So yeah, the opportunities are quite far wide for data centres. And yeah, I hope that was a bit more positive, and I'll hand back to Ed.
Thanks, Anna. Yeah, it definitely had the short end of the straw, as it were, talking about all of the tailwinds, but it's needs must, unfortunately, these sort of trying times in construction. I suppose just to round off the presentation then, so from a headwinds perspective, people talk about what's going on in the Middle East and the Strait of Hormuz at the moment. that has had an impact, but really all it has done is protract the impact of many of the existing headwinds that were already in place prior to the beginning of 2026. So the labour challenge, the ageing workforce hasn't changed in a long time, and there's a bit, we really need to be loud and clear with the UK government that there is a requirement for support to get people into UK construction. From a financing perspective, I think people still reference sort of the 2008 to 2022 period as the norm, but actually if you look at over a much longer period of time, the rates that we're seeing at the moment are very much consistent with what we've weathered as a nation. And then inflation as well, although it was relatively stable, we're still looking at things that are 40, 50, 60% more expensive than they were pre-COVID, and I don't anticipate that we're ever going to see those products see significant deflation to reset that. So many of those headwinds still persist, but in simple terms, we just need to get to grips with them and be able to operate through them. The tailwinds, however, some of those are new and some of them are continuing to build at a reasonable rate. I spoke about residential being a big detractor on UK construction at the moment, but actually residential RMI, as I said, particularly in social, is a big tailwind and something that if you're able to get involved with, I'd really encourage you to investigate. AMP8, as Hannah said, is a really big opportunity. I think it's probably going to be one of the most consistent drivers for new works for the rest of this century. Energy and transmission of energy, two big opportunities as well, for obvious reasons as we push towards energy sort of security, decarbonisation and net zero by 2030 or 2035. Hospitals, which we didn't touch on massively, but are a really big opportunity. And then finally, data centres as well, which I think they are spoken about a lot and banded as a significant growth sector for construction. There is a lot of growth and there will be a lot more growth to come. But what I expect to see is that we will see a slowdown in applications, and that many of the applications that sit on the current pipeline we will begin to see sort of going into production and construction. As Hannah said, there are nationwide opportunities within construction. It's not just data centres and infrastructure. There are still projects being built across all segments, and Barbara ABI can help you find those. Thank you very much for listening to our portion of the session. I'm going to welcome back Martin now, who I think is going to ask for you all to participate in a couple of polls before we maybe answer some of the questions that I can see have come in during the session. Thanks very much.
Brilliant. Thank you, Ed, and thank you, Hannah. I just think some absolutely fascinating insights and statistics there. And Ed, you're absolutely right. This is the portion of the webinar that we want to make absolutely as interactive as possible. So I'm going to start off with a poll, our first poll. So let's get that live. And this is going to ask you the question of which statement best reflects your outlook for the UK construction market right now. We've got loads of votes coming through. I'm going to keep it open for about 30 seconds, 45 minutes. So please tap on that as we go. While we're doing that, I just want to remind people as well that we're going to have a Q&A section after these polls with both Ed and Hannah. So please submit your questions. You can do that by clicking on the question tab in the top right. If you can't see it, there's 3 lines. Drop that and you can access the question thing there. Pop your question in there. We're also going to try and answer as many as possible, but if we haven't got time, Barbara ABI will be back in touch with you directly to answer your questions. So, right, let's put an end to that poll. It's been almost a minute, and let's have a look at the results. So we've ended that. 52% of people saying it's very challenging and uncertain at the moment, closely followed by stable but slow with 24%, casually optimistic 22%, and only 1% saying actively declining. Ed, just quickly over to you. Any comments?
I think that would align with what I hear from a lot of the people that we work with at Barbara ABI. Challenging and uncertain would probably be the words in. If you asked me to give you 5 words, Martin, those probably would have been in there. I would hope that the people that are cautiously optimistic are probably aligned with the sectors that we've called out that are doing well, or they're very dominant in some of the sectors that are maybe not doing as well at a top line level, but they're a key player, for example. But yeah, very difficult situation at the moment for a lot of companies, and it's wishing for better times.
Absolutely. I think it just shows the importance at the moment about getting accurate market insights as well, which you absolutely showed the value in that presentation. Right, let's move on to the second poll and get that live. So this one is going to ask you, which sector do you see the most opportunity in? So again, we're going to keep this open for about 30 seconds, 45 seconds. So please vote. We're asking you whether that's infrastructure, looking at those transport and water sections, the energy and utilities that Ed talked about, residential, especially social housing and the retrofit markets at the moment, or is it what everyone seems to be talking about, is that data centers, digital, being driven by that boom in AI at the moment. So we've got about 15 seconds. I'm going to cap it off at 45 seconds.
There's a clear front runner already, isn't there?
Yeah, I'm going to say
I don't imagine we'll see a big shift in the answers, Martin. Maybe I
no, let's publish that.
Offer a bit of some thought there. So obviously I'm speaking to people on a daily basis from our customer base, and people within the industry as well. And data centers, I'm inundated with requests, whether it's for comment for the press or whether it's people asking for access to our data on data centers. We've even been in discussions with government recently about how can they better understand the data center pipeline and the outlook for UK construction within there. So it doesn't surprise me to see that as a front runner. I suppose my call out to everybody in the audience that isn't actively involved or considering it, consider how your business could get involved, because I do see that as being an opportunity for quite a lot of people to get involved. There are pieces of every project that are available to lots of businesses, and to get involved in consortiums or collaborations and to find the opportunity to keep things going.
Yeah, brilliant. Well, thank you. So we're coming on to the Q&A section. So Ed and Hannah, you'd be pleased to know loads of questions have been fired in. If you're doing this, please keep on asking them. We've got about 12.5 minutes, so I think we'll be able to take sort of 4 or 5 here. Ed, I'm going to start off with you with a question for yourself. So this has come in. It says, if housing starts, as you mentioned in your presentation, are down 25 to 30%, why should suppliers be optimistic about the construction sector?
Okay, so construction as a whole, but housing's a big part, residential is a big part of construction, but construction as a whole obviously will be shaped by what happens there. Short to medium term, housing is going to suffer, simply because we're not seeing the normal version of the normal volume of applications going through. But there is a stated intent there from the government of 1.5 million homes. That number is fanciful, but there is a statement of intent. I'm sure that there will be further support coming through in the future, and I think things can turn around in residential quite quickly should the broader conditions ease. And as I referenced in the presentation as well, I think RMI, particularly in social, is an area where it's been more resilient and maybe even seen some pockets of growth. So that kind of addresses the residential side of things. Sort of general optimism, I would just reference back to infrastructure really. So £718 billion worth of committed spend over different periods of time. 734 projects within that. So we're not talking, if you divide 718 billion by 734, we're talking about significant size projects. We're not talking about, small projects that companies can't get their teeth sunk into. And then within that, you've got AMP8, which I think is going to be a big source of consistent work for the next sort of 5 years. And then power and utilities as well. We've seen Hannah referenced on that chart, power and utilities going from 7 to 54 billion. In terms of pipeline. That isn't just a couple of projects, that's substantial amounts of work that is becoming available to people to go out and tender for. So there are plenty of, I'm not going to lie, there are plenty of headwinds, but there's also plenty to go out and to try and win. You've just got to be active in the market and maybe a bit more flexible than we might have been in the past.
Brilliant. Thank you, Ed. Hannah, I'm going to move on to the second question. This is one for yourself. So someone's asking, are data centers generally a long-term opportunity, or are they just an AI-driven bubble? I mean, this is in the news a lot at the moment, so it'd be great to get your input into this.
Yeah, it's a very interesting question, I suppose, because like you said, you can't open the news, or even just you feel like AI's popped up overnight sometimes, and suddenly it's influential for everything. However, I'd say not. I'd say it's not a sort of flash in the pan seasonal sector, mainly because of the things we spoke about. So the government have taken note, all of the planning changes, the nationally significant projects now, essentially. We've seen the pipeline in the planning application. So all of those projects that are still to go to site are still to come. So that, how could it be seasonal when those projects are still in years and years and years to be built? And so no, I wouldn't say it's a flash in the pan sort of AI driven growth bubble.
Perfect. Thank you. Ed, going to come to you here. So someone's saying, if there is so much infrastructure investment plan that you just sort of outlined there, can the industry actually deliver it given the labour shortages? And, you know, this has been massively in the news recently. I think even CITB today came out and said we need something like 800,000, you know, new people to get into the, you know, into the, or 80,000, sorry, you know, in the next 4 years coming in. So there's a huge skill shortage. Can we deliver on these projects?
If we wanted to start all of the projects tomorrow, absolutely not. There's no way. But that's not the way the UK construction or the world works, right? So what we've got kind of outlined is intent for all of the intent with budget kind of put to one side for substantial amounts of work. And that's where I'm, you know, for example, in the previous question referencing that AMP8 is going to be a source of work for sort of the rest of this century and maybe beyond that as well. The positivity I would draw from that is there's going to be a steady pipeline of work for people, and as workers are finishing one project, there will be more work to move on to. If we can get more people into the industry, I think that is no bad thing. I do think that labour is, I said it at the start of the presentation even, that I think a labour shortage is the biggest risk to UK construction at the moment. And it probably has the potential to become the biggest bottleneck for some of the really big pieces of work that we want to do. And that the sort of the nation and the government in particular might need to become selective about which tranches of work are being prioritised. Really, we need a big push, get people into construction and get the nation building again, because there is appetite to build, especially across infrastructure. But as we've kind of alluded to, that there aren't enough people. I think the stat from the slide, I did some crude calculations to say that if we wanted construction to represent the same share of UK employment as it did 15 years ago, I think it's about 700,000 people. Wow. Never mind the 80,000 that we might need to reach some internal we might need to reach some internal targets for, you know, net zero and stuff like that. We're talking about a big injection of people, and, you know, there's been various things that have happened in the last 10 years that have displaced hundreds of thousands of people out of construction. So yeah, I personally would like to see a big push led by the government getting people back.
Yeah, I'm going to keep you on because one of the questions that sort of is cropping up, and I'm going to try and summarize this, is sort of a lot of people are saying sort of why are developers still holding back? Because what's clear at the moment is that, you know, interest rates are stabilized or even falling. So why is there, you know, why is this work not being unlocked?
I think it's the interest rates coming down is positive, but I think people are dragging their heels in the expectation that they will come down further. You know, the cost of financing some of these projects, you know, if you're doing a £100 million residential development and taking on significant debt in order to fund that, it's not unreasonable to think that interest payments during the course of a development 10 years ago might have been £2 million and now might be £8 million. It's a substantial shift in the cost model, and it's a substantial shift in people's profits. So I think the dropping rates are appreciated, but the financing costs are still high, especially when they're often being contextualized against the rates. Oh, we had them in 2022, you know, but the world has changed dramatically in that time period. So yeah, I think just the finance rates have really affected viability and a lot of people's minds, and that they are perhaps waiting for better days.
Brilliant, thank you, Ed. We've had loads of questions, but I'm going to ask one more, and Hannah, this one's for yourself. So someone here is asking, what is the single biggest threat to delivering the government's infrastructure ambitions? That's a big one.
It's quite a big one to end on, yes. Single biggest, it's difficult to answer. I suppose I wouldn't want to cover old ground in everything that we just presented, because everything we've just presented is relevant to that question, all of the challenges that we spoke about. I suppose if I had to summarize it, you've got two sides. You've either got whether projects are being held back because of funding and investment, or whether projects are being held back because of capacity and capacity, whether that's in recruitment, in planning, whether that's in the infrastructure available. So we talked about water and grid connections, whether that's in changing sort of environmental requirements projects, sort of hoops they have to jump through. And from what we've seen, and like I said, when we went through all of the investment opportunities, investment that's happening, it does seem to be that the single factor is capacity. The drive for the projects is there, the desire and the appetite for the projects are there, but the infrastructure within the UK is perhaps not ready to support them yet.
Yeah. Thank you, Hannah. One of the questions that's been coming up a lot is that a lot of people have been asking, is this going to be on demand? But actually, people have been asking, can they have the slides? So to do that, actually, I'm going to put a poll up right now. And if you answer that question, yes, then Barbara ABI will actually forward you and send you over those slides after this. So please answer here if you want to receive the slides, and we'll drop that over after you. Hannah and Ed, I want to say a massive thank you for taking part today. For me, if there's one takeaway, one key takeaway from today, it's that this isn't a uniform market. It's fragmenting. You know, some areas are slowing, as you've covered in your presentations, but others, like data centers, are accelerating fast. Also, particularly infrastructure, energy, and it's all been driven by that digital demand intersect at the moment. So the opportunity isn't just riding the wave, it's knowing where to position. So I want to thank you both today for that amazing presentation. Thank you for everyone that's through it, that's interacted, taken part in the polls, asked the questions. If you want the slides, please say yes on that. This is part of FutureBuild's Connect 365 program of digital events. So if you visited our show at London, you'll soon be able to access all of our on-demand content. Really happy to share that. We'll be doing some more webinars as well. And I want to finally say and finish on a massive thank you to Barbara ABI, who are our data and insights partner. Please reach out. They're going to be in contact with you afterwards, sending you the slides. This will be on demand, but check out their website, check out their insights. I read their monthly reports. It's the way I stay ahead of the market. So yeah, thank you so much.
All right, thanks very much. Pleasure to have presented. I can say 87 said yes, and unfortunately 7 said no. So we won't take offence to the 7 no's, but yeah, hopefully look forward to connecting with more people in the near future. Thanks very much. Cheers, Martin.
Thank you.